Eric Muathe, Muathe.com. Let's take a look at the chart for FNMA. We can see that for the month of February, it is down about 30%. Now, I wouldn't say that that is surprising because honestly, if you take a look at the stock's history, it has a tendency of giving back gains. You can see all this period where it gave back gains after having a nice showing. Even here, gave back all the gains. You can see at the highs for this month, it was trading at $6.25. Would end up touching the lows here for the month of about $3. That's a huge swing. We can see this 2-month drop, loss of gains here. And recently when it was moving higher, of course, knowing that it has a history of doing this movement over the last couple of months is no surprise. So yes, there was a nice monthly gain here, but that is it. It went back to its history, which is a showing of giving back of gains whenever it is moving higher. So let's say you are trying to play this breakout here, which was based off the previous close on a monthly basis of 4.80, which goes back to this month. You can see that it became relevant in the current situation because this has been a problem going back to 2014. Here was multiple attempts to break out above 4.80, and we can see here at the highs of the last couple of months, it tried to close above that price on a monthly closing basis and failed. Once we saw that failed monthly breakout, of course, we had to assume that the next meaningful direction was down, and that's exactly what we are getting over the last couple of weeks, which, by the way, is relevant to our uniformity method. Check the description for this method that I call the uniformity method, and we can see it goes back to this break. We can draw the break right there. In fact, or even take this break here in about April of 2014, draw a line from here, and anytime we hit this line with uniform action and we are rejected, that tends to be good enough for a sell signal. And you can see here this is double rejection as it tries to weave itself above that red line, which might explain that this is why we get this monthly closing high here and this monthly closing high, and now we are seeing this drop. Why? Because we've seen uniform activity rejection during this attempt to move above that red line. So check the description for that method. That would have helped you understand why this was due for a pullback. So the pullback, given that stock tends to lose ground when it's moving higher, and the fact that it's come back to hit our uniformity resistance lines, plus don't forget a failed breakout attempt when it tried to break out here. Take that all in consideration. The recent move lower just makes a lot of sense. So we've been looking at a 5-year monthly chart. So 5-year monthly is what we've been studying here. Let's take a look now at a longer period, about 8 years worth of data. I want to show you that there was a period where the stock looked good, and I'm talking this period here where the stock broke out. Our buy point at the time was 0.88. After it met our minimum requirements, it was a buy. We had a chance to ride part of this move that took it from 88 cents to the highs here of about, let's call it $5.25. So we had a chance to own it because it met our minimum requirement during this breakout here sometime in early to mid 2013. And by saying it met our minimum requirement, we can see that the RSI was breaking out here to 3-year highs, which is one of our requirements. Check the description for the ultimate Muathe breakout description. And we can also see that we had a breakout in the MACDs also. So the MACDs at that time period, so we're talking about this breakout here. That time period there, so it's something like that. So let's get that straight here. So we're talking about this breakout here. We can see that RSI was definitely at 3-year highs. So that met the minimum requirements, no doubt. And we can also see that our MACDs were also breaking out to 3-year highs, which is why we had an interest in the stock in 2013 before that explosive move from about 88 cents to the highs here of about and above $5. So that's when it was acting well. Since then, the stock's been pretty much all over the place and a reason to avoid. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESCS. Mwah. Woo. ERIC Muathe with Muathe.com, coming through you live through the Sepeta. Tikatang, kang, kalinglang, tikadung, tang, kadongang, kakadeng, tang, karangang, karangang, gang, gang, gang.